Eric Muathe, Muathe.com. Let's take a look at the daily chart, weekly and monthly chart for FAST, and we can see today it's huge plunge, gapped down and closed down about 8% for the day. Now the question is, was there anything on the charts, on any of the weeklies, monthlies or daily charts that was telegraphing this type of a movement? Now, number one, we can see that we can find several reasons here on hindsight. You can see here there was a failed breakout attempt on the daily, tried to move above the previous daily closing high and was rejected. There, that was a warning sign. Keep in mind, this attempt to move higher on the daily came at the expense of the technicals, because we can see that the RSI was making a lower high. So that was a serious negative divergence. So there was another warning sign. If we take a look at the weekly, we can see that the weekly also had the weekly breakout attempt. That was a previous weekly closing high, just under 52. Tried to stay above that, moved above it, but was rejected. So that's another failed breakout. That failed breakout attempt also comes with declining technical strength. So there is your negative divergence again on the weekly. So it explains why it's coming off the highs. Maybe the pace of the movement lower is a little bit of a concern. Where did that come from? But I'll show you that on the monthly chart there was reason to suspect that the stock could run into problems. I'll share with you two lines on the long-term monthly chart, and we begin with the first line, which goes back to this break. There was a trend line break here on the RSI as of 2013, so somewhere around the highs there. We would go down, come up, eventually we would see lower prices. We take that information and draw a line right there. We can see that since then that line has been a problem. Uniform activity rejection there. You can check the description for that method, which I call the uniformity method. And again, now we can see in the current market we hit the same line, and now we are seeing this reversal. So the monthly chart was already telegraphing the idea that the stock would run into problems. There's one other line that goes to the break point recently. There's a line connecting RSI lows here and this lows. So what happened here is once we broke below this red line here, 2014, somewhere there, we drop from here to here. Take that information and extend this red line, and there you have it. We see that yet again the stock has tried to move above the red line here at the beginning of 2016, which is here, and was rejected, and it moved from about 47 to the lows here of about 37. And now in the current market we've hit that same line and the stock is pulling back. In fact, let me take that information out of there so we can draw a simple line again. So this line here, the break, we extend the same line, and you can see that line has become relevant in the current market. So really from the monthly chart, and if I bring back the previous resistance line, we can see that this is where the stock was always going to struggle. As of right now, it seems to be responding to those two lines. Given the failed breakout attempts on both the weekly, as it tried to break out here, weekly breakout failed, and as we know, failed breakouts are notorious for taking stocks lower. And we can also see that on the daily there was another failed breakout as it tried to stay above the previous daily closing high. That's a failed breakout, and after failing there, you can see that stock is now turning down. Eric Muathe, Muathe.com. As always, good luck, peace and blessings.